Hello, everybody. My name is Doug Morris, and I'm the CEO of Sharesight. Thank you for making time to join me today to talk about risk and how best to use Sharesight really to analyze risk in our portfolios. Um, what I'll do, I've got a bit of housekeeping up front, and I will then go through the product and discuss some of the risk elements that we have available in Sharesight. Just before I do, just note that this webinar is being recorded. So if you need to jump off, go grab a bite to eat, something like that, you can always come back and watch it later on. We will send around a link to the recording. I'm sure we'll post it on our YouTube channel and things of that nature as well. Um, and I'll talk for about 25 or 30 minutes, I think. We'll keep it pretty brief, and there'll be time for Q&A afterwards. So please just use the Q&A feature in the Zoom webinar software to ask questions. You can do so during the course of the presentation or wait until afterwards as well. And I'll try to get through as many of those questions as I can. Um, so just a quick legal disclaimer. Everything I'm about to say is not to be considered financial advice. So I'm not a financial advisor. I'm not a fund manager. I'm just the CEO of a software company. We don't have an AFSL at ShareSite. So we're simply a reporting platform, as you probably know. So anything I say is not to be considered financial advice or taxation advice. If you do have questions, if you need guidance on that, please speak to a qualified financial planner or an accountant. All right. So with that, what I'll do, I'm just going to jump into ShareSite, and I'm going to begin um, talking about risk and how we can use ShareSite to assess what's going on. We didn't really time this webinar to be on the eve of what's being called Liberation Day in the States, my home country, as you can tell from my accent. But I suppose it is timely because we've seen a major rotation out of risky assets in the calendar year so far into more defensive assets. And I think the old kind of tried and true balanced portfolio, multi-sector portfolio type investing is certainly coming back into vogue. And so what I'll do is I'll kind of take you through a portfolio of mine. This is reflective in many ways of a real portfolio with some other elements added in to kind of demonstrate some of our features and how you can use them. But to show you how ShareSite's not just about tracking risk investments. It's not just about kind of long-term tracking of equities, which of course it was designed to do. But there's a lot more kind of underneath the bonnet that I hope today will show you more about how to use. Uh, so first and foremost, I've logged in here. This is an expert plan, as you can see at the top. So this gives me access to 10 portfolios with unlimited holdings and access to all of our markets. And I just think it's quite interesting because, over the last sort of 10 or 15 years, for as long as we've been running ShareSet as a business, we've kind of been in this risk on posture when it comes to investing. We know what markets have done since then. We know what tech stocks have done since then. And it was only until the end of 21, early 22, when interest rates started to rise, where things began to change. And so we find ourselves in a much different scenario since then, and certainly since the change in presidency in the U.S., things have certainly changed. And just to demonstrate that here in terms of performance and how we kind of begin to assess risk, this is a portfolio that I track, as I mentioned before. What I'm looking at here is my performance index chart. My portfolio is in orange through time there, and my benchmark there is in red just below. Um, so you can see it was kind of a predictive story for a long time there until that correction in late 21 when equity markets started to really pull back. I wanted to highlight this chart first because obviously it's kind of the homepage. It's all about what we do. Um, but I wanted to mention benchmarking here. And so when you're assessing risk and you're using our platform, one of the powerful features you can use quickly to check how you're going is our benchmarking feature. It's much more than just a price index. I think a lot of us as investors, myself included, are conditioned to look at just the S&P or the ASX and see what it's done. I mean, it's kind of what I do. Frankly, when I wake up in the morning and I check my phone, I look to see what the S&P or the Nasdaq has done overnight. But that is just a price index, and that's independent and separated from our experience as an investor. And that's why our benchmarking feature is quite powerful in the sense that it assumes a common investment date and amount of money invested in the benchmark you've chosen, and it tracks it through time in parallel and in comparison to your actual investments. And so you can see in this case, I have the VDGR. It's a Vanguard Diversified Growth Index. We have no affiliation with Vanguard, but I do like these ETF products as benchmarks. Uh, Namely because they're diversified, sort of off the shelf. They're diversified, and they've got a range of them from conservative through to more aggressive growth. They're low fee, they're Vanguard. That should come as no surprise. But it's also like a realistic plan B. So when I think about benchmarking, I don't think about am I beating or lagging the benchmark, so to speak. I think about that more so as my plan B as an investor. So as somebody who's busy with life, running a company, two small kids, and so forth, are there times when it would make sense for me to allocate some or even a lion's share of my portfolio to a benchmark as almost an autopilot option? And that's why I like this diversified growth index. Um, you can see over time I was sort of handily beating that, but of course the two lines have converged as of recent. And if you change the time period to say look at the last 6 months, you can see here that actually the two lines begin to converge quite a bit. Just give it a second while that loads up. Yeah, so you can see they're quite a different story if we zoom in the last 6 months, and certainly again, I think that they would almost cross if we looked at performance since the 1st of January. Um, just a note, the last note here on benchmarking is you can benchmark your portfolio against any security that we track in our database. So it's upwards of 1 million securities now that we do offer on the platform. We have some pre-fill common instruments here. But one thing that I wanted to do just for today was just have a look at a conservative index instead of a balanced index, because I'm sure you've seen some of the charts to see what are the assets that have actually gained any return over the past few months. And it's things like gold and cash and some of those usual defensive asset suspects. And so this might be a more appropriate thing for me to do is track myself against a more conservative index as opposed to a balanced growth index, as sort of a new plan B, if you like. Well, and we might see what happens tomorrow after tariff announcements and what, but that is something you can do quite easily here uh, in your portfolio. Um, I have been asked before the webinar by some of the attendees just to run through some of the setup steps really quickly. So if you know this already, I apologize for the repetition, but I think it's also pretty timely to just remind everyone that you can track all manner of assets in Sharesight, and it's pretty easy to do so. So once you have a portfolio up and running, you can always add new investments to it. You can go back and add in assets that you haven't been tracking on the platform. You can certainly add new investments that you've made. There's really kind of no right or wrong way to do this in terms of how and when you add them. You can bring in trades from a broker. So we maintain connections with hundreds of brokers. If there isn't an automatic API-driven connection in place, you can always just export your file from the broker, your trade file, and import that. Sharesight ought to recognize where that broker file is coming from and make it pretty easy. If you've maintained a spreadsheet of assets, like many of us do, you can upload that as well, or you can just add a trade manually as well. We also allow the tracking of cash accounts, and I'll show that off in just a second. And we can allow you to create custom investments as well. The custom investments strategy is a really good one if you want to track things like private equity or term deposits. And I'll show you that in just a moment. Again, speaking to that rotation towards defensive, perhaps even yield-bearing investments. So with that, I might just go in and just do a quick refresher on how to create a cash account. So we've made some recent improvements to this, and I think this is timely given the fact that people are shifting portfolios more into cash. So there's a few options on how to do this. There's the cash account sort of basic feature, which I'm showing off now. If you have a connection to Zero, and you have bank feeds going into Zero, you can also pull those back into Sharesight as cash investments. That's a really neat little trick because Zero supports term deposits and cash settlement accounts and all manner of basic transaction accounts, of course, as well. But you can kind of treat those as investments if you or your accountant has a connection between Sharesight and Zero. But in any event, I'll just show you quickly how to do a cash account here. So just give this just a basic name, cash savings. You can select a currency and you can create, and then you can begin adding transactions or deposits into that account. And then of course it'll filter into the portfolio and be there as one of your constituents in your portfolio. So just a reminder there. And quickly, we've also just released some new functionality on cash, whereby in the portfolio settings menu, in the cash accounts menu specifically, you can nominate your cash accounts to be synced to trades and to dividend payments. So if you make a trade, a buy or a sell, or you receive a dividend, your cash account in Sharesight will automatically reflect that activity, and the balance will update accordingly. So in many ways, it just acts as a proxy for what's happening in, say, your ComSec CDIA cash settlement account, for example. So it's a pretty powerful tool. It's always been a popular feature, and certainly it's getting more traction based on the data we see with people investing more in cash, frankly. Um, but again, quickly, I will just show you how to add a custom investment as well, because this is a really powerful feature. Um, you can give your investment a code, you can give it a name, and then you can pick the description. So if I just give this, say, test, and if we say fixed interest, um, you can tick this box to automatically calculate income and maturity. So you can give it a face value per unit, which is usually $1 per. You can give it a coupon rate. So let's just say we're going to get 4.65%. It's interest. What's the frequency? First payment date, maturity date, and so forth. So that now is set against this new investment you've created. And as you add a deposit or a trade, it'll begin calculating those interest and yield payments automatically inside your portfolio. So a really good way to start tracking term deposits if that's something that you've invested in, or you're considering doing so in your portfolio. Right. So that's just a bit of basic housekeeping, just to mention kind of getting things set up in Sharesight. So what I'll do now is I'll just jump into the performance report and begin talking more specifically about risk and how to assess it using our platform. So I've gone into our reports menu and I'll go into performance. So this is pretty obvious, right? You pick your time period, you configure a few other settings, and you can see straight away how you've performed. So this picture here paints quite a different one from my long-term performance. What you can see, of course, is your annualized performance based on your holding. And in this graphic at the top, you can see the overall contribution by weighting in the portfolio, which corresponds to the size of those square and rectangular blocks. And you also have the table display below. So you can see in this case, the current calendar year looks more like a festive kind of Christmas decoration than my since inception performance, which I would hope in most cases is mostly green. But again, I think a lot of us use Sharesight, at least I do, for kind of this long-term performance analysis. But again, using time periods and groupings, this really is a good way to begin using it more on a tactical basis, given the kind of the whipsaws we're seeing in the market right now. I've always taken a long-term view as an investor, but in this case, I've really started to use these time periods to kind of show, okay, show me past 7 days, and what the performance story is on a more short-term basis for my portfolio. I'm actually quite curious to see that. Let's just let that load up. Yeah. So again, um, some kind of mixed bag. I should also mention labels here as well. So you'll notice these colorful tags next to my investments. These are called labels. And what I've done in this case, I've actually assigned labels based on broker. So you have your portfolio set up in Sharesight, which we always recommend are done to tax entities. So discretionary account that's taxable at discretionary rates, a superannuation or SMSF account, or even a company account for professional investors. We also have custom groups, which I'll show off in just a moment as well. But then we have labels, which is a lesser known feature, but it's quite powerful because labels is just another sort of overlay to show a classification system for your investments. And in this case, I use a particular broker for discretionary stuff. I use another one for international stuff, and another again for super. And that corresponds to these color codes here as well. So you can manage these labels by going into the holding itself. And you can go down to the bottom right-hand side, and you'll see this labels panel, and you go to manage labels. And this is where you can assign labels to all the constituents across all portfolios. So you can see in this case, these are my brokers. I've got Coinbase for crypto, ComSec, Interactive Brokers, and NabTrade as well. All right, so also just a note on future income. So as we begin to look, I suppose, more at dividend-bearing investments, if you haven't already, or if you're rotating more into dividend and yield bearing investments, the future income report is really useful for this. I won't spend much time on this. It's pretty straightforward. Um, we will be adding quite a bit of functionality to this report in the near future. So we're moving towards not just a basic reporting of the announced dividends, which is what it does now. We're going to be moving more into a cash planning module where you can see upcoming dividends on a much longer term basis with a calendar view, and also the impact of cash flows on your portfolio as well. So again, if we're rotating into defensive assets, yield bearing assets, dividend bearing assets, this is going to be a very, very powerful feature for cash flow planning. So back on reports, a report that doesn't get a lot of love, but I actually really like this report a lot, is our contribution analysis report. Um, just a quick note on this one. This allows you to look at the contribution per investment to your overall return in your portfolio. And again, we're only talking about performance here. We haven't really talked about asset allocation or risk, and I'll get to that in just a second. But you can see on an all-time basis, and this is a 25-year time horizon here, you can see that the by far and away the most outstanding performer in my portfolio has been CBA, thanks in large part to their frank dividends, followed by Amazon and a Vanguard ETF as well. So this is just a really useful report to kind of take a wider look at the contributions, but also to kind of assess, okay, what's going on a shorter term basis. If we look at, say, this month, and we'll see what's going on over the past 30 days with that portfolio. So not too bad. With actually Ethereum, the crypto holding, doing quite well over the past 30 days. So again, another way to kind of look at your performance over time. Another report in terms of risk, which actually is quite useful, is the multi-currency valuation report. So like many of our investors, I think 60 to 70% of our client base now holds investments overseas, predominantly in the US. But if you've kept an eye on the Aussie to US dollar pair, you'll know that that's moved around quite a bit over time. And that really does have an impact on your performance. And just another kind of, I suppose, risk input into your overall portfolio, right? Of course, you've got your capital movements, you've got your dividend income, you've got all kinds of geopolitical risk and interest rate risk and so forth. But FX risk is something that is a major impact, major driver, I think, for us as Australian domiciled investors. And so with this report, what I like to do, in addition to kind of having a look at the FX impact on the overview page, I like to come in here. I like to change the date range to perhaps sometime in the past, or just for today, I'll leave it today. And I like to look at my portfolio both in Aussie dollars and in US dollars. A lot of our client base are sort of multi-country, multi-domicile. You may be an expat living overseas. You may be like me and come from, say, the States or Canada or the UK, living in Australia. And so you kind of think in multiple currencies when it comes to your portfolio at all times. And so a nice little hack that I use here is, if I look at my portfolio in Aussie dollars, I'll just group by the exchange rates, which brings all of the pairings into a group together. And then I just export that to Excel, and I look at the differences between, say, USD and AUD through time. So I like to kind of take data out of Sharesight and use it myself, but this helps kind of explain some of the interest rate risk that I'm wearing on my portfolio through time. So just a quick mention for the multi-currency valuation report. So getting into diversity reporting and asset allocation itself, which is kind of more classically how we examine risk in a portfolio. Our asset allocation reporting begins with our diversity report. And I think when we think about risk in investing, we think about how we're exposed, what asset classes are we exposed to, what countries are we exposed to, and again, how do we want to shift those allocations over time to either prepare our portfolio for a shock, if that's what you think is going to happen, or to take advantage of depressed asset prices, for example. So with our diversity report here, I'll just keep it set to today, and I'll just run that. And you basically just get a pie chart that's spit out here with the groupings that I've chosen. And I'll speak to those in just a moment. But what you can see here is these are all the investments in my portfolio, and I have a percentage breakdown and a value breakdown. And so where this report becomes really powerful is if you spend a little bit of time working on your custom groupings, you can really get a sense for how your portfolio is positioned. So you can see in this case, I'm using what I'm calling a growth and defensive view, and this is something I've created, and I'll show you that in just a second. But you can see that my portfolio is actually, and honestly, I did this just in preparation for this webinar. I thought I was kind of much more growthy than I was. I would have figured I was more 75-25, so growth to kind of defensive assets. But you can see in this case, actually, when I sat down and I classified things in a bit of a different way, it's more like 50-50. Um, if you consider some of the index growth, i.e. ETFs, a bit more of a defensive assets. I mean, given, well, to date anyway, the correlation of how assets have performed and stock markets have performed, it was kind of like everything was kind of moving in unison, bar some of the Asian exchanges like Hong Kong. But again, if you think about sort of indexes or ETFs as safe havens, you could classify them as sort of defensive assets as well. I also have other ones on here like Core Satellite, which I'll just flip to. And using something like this, you can have a more thematic lens on how you're thinking about your exposures as well, which again speaks to risk. So ETF core, that's kind of a catch-all, and I can show you what's in there in just a moment. I have my tech exposure, I have my ASX core investments, some crypto. It never meant to be that large of an allocation, which is something I'm beginning to think about as I look at this chart. Now it's almost 10%, which is personally a bit scary. Cash is sitting at 7, Chinese exposure at about 6. And other cash accounts at 1.42. That's that cash settlement account that I created just now. So it's a bit of a different way to look at that as opposed to the classic, country or sector classifications that you're used to. You can launch into our custom groups feature from that drop-down menu. You can also access it from your account drop-down at the top right. And so you can maintain any number of custom groups depending on the plan type that you're on. If I go into that growth defensive split, you can see here, this is my defensive column, index growth and growth. This is hypothetical. You can do whatever you want with this. So, you can change the names to be whatever you'd like. And then for any ungrouped investments over here on the left-hand side, it's just a matter of dragging and dropping those into new buckets as you see fit. But this is a really good time, given where we're at market-wise, to kind of think about how risky, how defensive you want to be, and then reflect that in the custom groupings in Sharesight. You can see these other groupings that I typically use: resources, core ETFs, and super, US tech, China tech, ASX, and so forth. But kind of depending on what I want to achieve and what I'm thinking about, custom groups are a powerful way to add this overlay to your portfolio. All right, so that's diversity. I'll now go into our relatively newly launched exposure report. This one essentially shows you inside of the ETF holdings that you own. So most of us would own ETFs now. When I started at Sharesight 10 plus years ago, I think it was in single digit percentages in terms of our Australian customer base and who owned ETFs. That number is approaching 50%. And so what this report does is it allows you to look through those ETF portfolios and then compare with your direct holdings to see if there are overlaps. Indeed, in this case, there are. So at the top here, you just have just a breakdown of my assets. And I know, for example, that I have a fairly large exposure to Amazon. And this report shows me where it's actually coming from. So on an overall basis, 14.07% of my portfolio is in Amazon with a value of just under $100,000. That might strike me as, oh, that's getting a bit high. So where is that exposure coming from? If I unfold or unfurl that menu, you can see it's almost 14% in my direct investment in Amazon, but then I have exposure through 1, 2, 3, 4 ETFs that I own as well: IVV, the NDQ, USG, and the VECO. So those are pretty small allocations, but they can creep up over time. And if you've got a certain personal preferences to things you want or don't want to be invested in, this is a really useful analysis for doing it. And especially if you're predominantly an ETF investor or you've shifted your assets perhaps into a more passive posture, and you've got a lot of ETF concentration, you're probably going to have some pretty heavy duty overlaps within those ETFs as well. We see a lot of people owning the VAS, Vanguard Aussie Shares, along with the Vanguard high yield Aussie share index as well. And there's a really tight Venn diagram with those two portfolios, as you might imagine. And so you can see just very easily in this report, where I'm exposed. Apple is another really good example. I don't own Apple directly, but I'm actually 0.2% of my portfolio is in Apple, and it comes from those four underlying ETFs. Same with NVIDIA as well. So it's a really good report to show you any kind of risk exposure in terms of a country or thematics that you may not want in your portfolio. Now, next report, and this one really does speak to drawdown and risk specifically, is our drawdown risk report. So this is brand new, launched a couple of months ago. And so what this report shows you, I'll just check my inputs here. Time period, group, run report. So what this report shows you, it's a scatter plot that's going to show you risk and return. Now, it's important to understand how we're defining risk in this case. What we've done here for our first cut of risk analysis at Sharesight, we've always done performance, we've always done tax, and we're moving more into risk and asset allocation type assessments. What we're defining as risk here is max drawdown. So really, max drawdown is defined as the largest observable loss in a holding from peak to trough, so peak to trough before reaching that new peak again. It's not quite volatility, and it doesn't speak to kind of a qualified risk assessment on a particular investment. It just talks about the kind of the potential of loss during the holding period that you have with that particular investment. So what we're looking at here is since 2019, and you can change these time periods. This is particularly effective over a longer term period. At least that's my opinion, because it kind of helps eliminate some of the noise and gives you a really nice step back. So you have your return on the y-axis here, and I'll show you what that outlier is. You might be able to guess what that is based on what I've shown so far. And across the horizontal axis, you see the drawdown. So think about this in terms of quadrants. Bottom right quadrant is really bad. And so let's go pick on somebody over here. So that's Magellan. Now, I've been a long-time shareholder in Magellan. I've kept it in this portfolio for demonstration purposes. I did unload that some time ago. But Magellan was in the news for certain reasons, and it had a bit of a rough go from a price standpoint. And you can see that not only has my return been negative, minus 1.82%, well, my drawdown's been 92% drawdown from peak to trough, which is just astonishing thinking about, I suppose, that price volatility during the time that I've owned this particular investment. So bottom right quadrant is bad. Top right quadrant is potentially good, but quite risky. And so we have an outlier up there, and that is my holding in Bitcoin. So it's been a standout holding in my portfolio from a performance standpoint, but man, it's been risky because it's delivered 190% return. Again, this is annualized. This is what we do at Sharesight, but our drawdown's been 74%. And I don't need to tell you about how risky Bitcoin has been. Certainly, it moves around, several percentage points on any given day. But that top right corner represents high performers but high risk. Top left quadrant is really the gold standard. I have nothing in there, at least on an individual basis. But Bitcoin is kind of adding a lot of noise, and it's actually rescaling that y-axis. And so what I might do is I might just click that holding down here underneath the chart, and that just eliminates it. And then the whole chart rescales, which is great, because now it's like, okay, let's put Bitcoin to the side. It's kind of its own category, right? It's its own almost geopolitical play, if you like. At least that's my opinion. And you can have a look here on a rescaled basis as to my investments. And so I do have a few things at least approaching top left. So again, that's high performance, but lower drawdown. And you can see drawdown is expressed as a percentage, left to right. And so you can see Microsoft, 33% return, drawdown of 38%. pretty volatile still, and we know what's happened with U.S. tech stocks, which speaks to that. Next to that would be CBA. So drawdown of 40% and a return of 26%. Again, that's including the impacts of dividends. Um, just out of curiosity, I wanted to go look at some of the holdings in here that are far less risky from a drawdown standpoint. You can also see too that I have my benchmark plotted on here. And when I add back in Bitcoin, I also have a portfolio average, which is denoted by the square holding on here. But as soon as I remove Bitcoin, I can no longer calculate the average. Um, but you can see here that these two circles here, which again, the size of the circle corresponds to the size of the investment, or the contribution in dollar terms to the portfolio. So I have a holding in the Vanguard Diversified Growth ETF. Again, that's that benchmark I mentioned before. And I also have one in the Vanguard Diversified Conservative Index as well, that alternative benchmark that I mentioned before. And what's quite interesting about these, no surprise that they're less risky, but the return profiles are actually quite similar. And so I want to then assess, okay, is it actually worth me holding these two ETFs, like paying two sets of fees? Should I just consolidate? Should I, what should I do about these? And so if I scroll down and I find these in my summary, and I'll just rank this by alphabetization, excuse me, so I can see this more clearly. I go down here. This is my Vanguard Diversified Conservative and my Vanguard Diversified Growth. You can see here the values, you can see the return, you can see the drawdown. And then what we also have here is what we call ROMAD, which is basically the risk, or the performance divided over the risk, the performance divided over the drawdown. It's just a ratio of risk and return, essentially. And you can see actually that my ROMAD scores for my conservative and growth are actually quite different. The growth has a much higher value of 0.39, which is good. You want a higher value compared to 0.20 for the conservative. And so it's kind of like, well, I'm actually sacrificing quite a bit of return here. I mean, 9% in diversified growth versus just 4% for conservative. How do I assess that? Is that going to change? Should I look at, say, a shorter term basis, year to date, for example, and on a longer term basis, sure, the growth is outperforming and has a higher ROMAD, which we want. But if we actually go to, say, year to date, we can see those two circles are now almost overlapping. And if I go down and I check the ROMADs, we have our diversified conservative is in positive territory, 0.18, and our diversified growth is actually lost ground on a risk and return basis. So perhaps that's me thinking, hey, this is a sign of things to come. Maybe I will shift my assets from that growth ETF into that conservative ETF. So that's just a really nice way, I think, of visually comparing risk and return in the portfolio. And again, you can remove any of these holdings. You can change time periods, and this is again our first foray into risk reporting. And I think you'll see us progressing on this and adding even more functionality. So hopefully you've been using this report and it's been helpful in you assessing risk. The last thing I would show too is if I just go and I want to change into, say, growth defensive to kind of get that really, almost pure look at my portfolio. And let's go to, say, since 2019. Just have a look at how this is bucketed. You can see here, I'm left with just my three categorizations here, which is growth, defensive, and indexed growth. Again, hypothetical for today's illustration, but you kind of get the idea. Again, top right is high returns but risky. So that's my growth assets. So those are my companies, basically tech companies, both in the US and to some degree in China. And so my return there has been about 11% annualized, but my drawdown's been 61%, which is pretty dicey from a volatility perspective. You can see though, what's quite interesting, my defensive assets, return of 11% and a drawdown of 28.16%. So, I mean, if you just compare these two circles, I'm basically getting, a very similar return profile for far less drawdown risk in my defensive assets. Again, defensive in terms of how I've categorized them compared to my growth assets. And then here is my index growth as well, which is ETFs for the most part. So that's really interesting. And to actually examine why that is, If I go into core satellite, again, another grouping that I use, this is all about kind of applying your own filters and doing some attribution. You can see, or actually maybe it's this one here. Just bear with me while I find the right one. Stop there. Well, anyway, to find the suspects behind why those bubbles are where they are, we'll just pick do not group, which is very useful to kind of decompose the whole portfolio. And then if I again, we're going to get rid of Bitcoin, and you can see here that these two ETFs are there, but really it's that Combank holding that I believe, and we can rank by ROMAD to see the best and worst. And so Bitcoin is way up there again. The return's been crazy. S&P 500 iShares, Microsoft, whatever. So CBA, yeah, CBA is right up there as well. And so what I'm saying really is that I actually classified CBA as a defensive asset. You could certainly make the case that an Australian bank is these days a defensive asset, and that actually is pulling that bubble far up that in line with those growth assets as well when we were looking at that basic growth and defensive analysis. So again, I'll just leave you with that. So again, yeah, so CBA is classified as defensive in here, which is really pulling up that return. Um, and then the growth assets are those tech stocks that I mentioned as well. So again, I really speak to this just to show you the flexibility that's behind these reports and how you might want to think about classifying your own assets and using some of these reports. Um, so with that, I've gone probably long enough on sort of how to use the platform for risk. It's been a bit of a whirlwind tour, but I suppose I can open it up to questions now, and I can answer some of those on the fly. So first question is about cash accounts for different currencies. Um, so at the moment, you can set up your cash accounts in any currency denomination. And with the new feature where you can sync your trades and your dividends, that should be translated through using the FX adjustments as well. So for example, in purchasing US dollar shares, one USD currency account. Yeah, so that would be the cash account can be denominated in USD. And if you purchase US dollar shares, those will be considered for the cash account. For the overall portfolio currency, though, that is set based on the currency you choose when you establish the portfolio. Two things have come up a lot from customers when it comes to what they want to see on the overview page. One is a quick way to adjust currency. So I showed before how you can go into the multi-currency report to look at that, the multi-currency valuation report, I should say. But in this case, it's not possible, but we are looking at adding that configuration on the homepage so you can quickly toggle between currencies to see your investments in any currency. The other one is average cost-based, average purchase price on the homepage as well, which we're actively considering as well. Next question here is about the diversity report. Target allocation. So for example, if I want 50% Aussie shares, 50% global, how the price of these parts will change over time. Exactly. So this is coming. So I personally am particularly keen on this feature. I came from a background in asset allocation research, which is about as exciting as it sounds. But at the moment, as you might know, you can only run the diversity report kind of in one dimension. You can apply custom groups, of course, to have a look at your exposures, but it's at a set point in time, which is dictated by this date range here. But there's no way to compare it to anything. And so what we are actively working on now is two things. We want to allow customers to have a through time look at diversity, right? So you can see how, think about like a ribbon chart or a stacked bar chart, how that changes over time. And absolutely to have a setting against that, either at I suppose at a basic asset allocation level or something a bit more intensive and in depth, like a model portfolio. I should mention too, in that respect, I would encourage when it comes to kind of assessing risk and examining what you might do with your portfolio. There's nothing wrong, of course, with creating more portfolios and using those as playgrounds, sand pits to kind of do back testing. I do that all the time, and it's quite powerful. But yes, in this case, the ability to create a model or a construct of weights and compare that to your portfolio, um, obviously on a performance basis, but also an exposure basis, is something we're actually looking at, and makes total sense to me. So that's a very fair and a good point. Um, so another question here on the exposure reports, being able to add an ETF which you don't yet own to see what changed. Um, that's a good question. So basically, it wants to assess what's in the ETF to then see how the exposures might change over time. I hadn't considered kind of that what if possibility, but one thing that we are adding is allowing customers to, when they look at an ETF. So I'll just grab one here. This is the conservative Vanguard one. So if I go into this, there will be an option in here to actually see all the constituents inside that ETF as well. So a workaround for the time being would be to add something to a sample portfolio and then just have a look to see what's in there. But that's a really good point around, okay, if I bought this, what would that do to my exposure on a what if basis? Um, yeah, so that's a really good point. I would also add too, like one thing we're looking at from a roadmap perspective is more of a toolkit in terms of those model portfolios, as I said, and really kind of expanding on the idea of share checker. So share checker it's an old feature, but it's a good feature. It just is a quick hypothetical analysis of investment of 10K in parentheses. So one thing I did was, like, I couldn't help myself. I had to look up the Newsmax performance, which is sort of Trump's mouthpiece in the States, which just listed, and I wanted to see what the performance was, and it's up 2,233% since it started trading a day or so ago. So anyway, the share checker's in there from a performance what if, not necessarily a holding exposure what if. But that's a great point, Tim. Actually, um, yes, the session will be recorded and released. No problem. Um, Someone's here. Limit on cash accounts, trading account, and 200 accounts. Is there a way to have three cash accounts with the same portfolio? I believe so. I mean, you can add as many cash accounts as you want. And when you do add those cash accounts, so again, just to recap that, add investment, create cash account, manual cash account here. So we'll just add this as, to April cash account, just for sample. Add a new cash account. That's now in there. We'll add a transaction, deposit, um, you know, just to fund that. And then if I go into settings, so this is settings at the portfolio level, not the account level, and I go into my cash accounts, I now have that option there. So yeah, you can have as many cash accounts as you'd like, synchronized with the portfolio. And then of course, there's no limit on how many cash accounts you can create vis-a-vis our custom investment feature as well. So you might have two term deposits with different, terms, and you can put those in through our custom investment feature. Um, Can any assets be added to Sharesight? Yes. So absolutely. You can add really anything, again, through custom investments. So again, go into add investment and create custom investment. And this is really kind of the world's your oyster in terms of what you create. So if you wanted to create, say, prop one for a property, maybe it's your main residence. This would just be like, house. Um, you can give it a description. This just dictates some of the functionality that will follow on. For property, in my case, I just keep it as ordinary shares. Australia, that's just the currency. All portfolios are this. And then I can just give it a valuation quite simply by saying, okay, no trade source. The quantity is one, and the share price is, say, 1 million. So that's my one unit in my house, which is worth $1 million, and I'll save that, and that's now added. And then you can go ahead and you can update the pricing and the valuation in this case through time. And if it's a rental property, you can create a term deposit, and you can actually have an income stream coming off that automatically in Sharesight. Excuse me one sec. A question here. I've accessed an old account portfolio and the holdings are incorrect. How do you edit on basic portfolio exchange? Well, I suppose if you have an old portfolio, depends how old and out of date it is. What I would encourage you to do is keep that in place, create a new portfolio, and then rebuild it. A nice trick to doing that is if you go into reports and you go into all trades, and then you widen the date range to be since inception, you basically now have a list of all your transactional activity that you've entered into ShareSite. Export that, and you can import that again into a new portfolio to have a fresh start. So that's a way to basically copy one portfolio to the next, and you can make your changes to update it there, so you have a backup. Um, but again, if you add an investment, it's not right, you can always delete it. You can update investments by adding new trades. You can go back in time at any point. It's really quite omnidirectional in terms of how you set up the portfolio. Um, can KiwiSaver accounts be added? They can. Again, that's a custom investment job. So I, for one, in another portfolio, maintain a holding in Australian Super, the Aussie super company, um, because industry super in particular is a closed shop. They don't like to give out pricing. They don't sort of securitize their holdings. You'll know this if you log into a super account. It's just like you're in the Aussie super growth portfolio, and that's it, and your balance just changes. Um, Again, you can create that using a custom investment, and you can just add opening balances and reprice it when you add funds into the account. So you can just add that as a trade essentially when you're making a contribution, and then update the price from there. Again, I would just do that on a one-to-one basis. So just price the super fund or the KiwiSaver fund at $1, and that just makes it easy, and you can dynamically change it as you roll forward. But again, there's a lot of flexibility in the platform, which, again, speaking of risk, I think is really, really important. Given that you might want to be tracking cash, term deposits, houses, art, you name it. And just a quick kind of sneak peek at some of the things we're working on, just in the interest of time. So we are actually looking at bringing in fixed interest feeds into the platform. So with ShareSite, I mean, you can, just to show you, I mean, we track millions of investments. I mean, any exchange around the world is tracked in ShareSite essentially, and we're looking to add fixed interest to this as well. And so you just come in here and you just add this just like sort of any old investment, and it would just come from a fixed interest provider. So as more of our investors, particularly our professional investors, are using traditional fixed interest, we want to add that functionality in here for them. And then I mentioned the enhancements to the future income report. And then again, stay tuned for a big release that's going to be coming very imminently, which is our new mobile apps. And so on Apple iOS and Google's Android, we'll have brand new apps that will allow you to view many of the things I showed you today inside of a really nice app. And it'll also have a watch list feature. So again, assessing kind of what's going on in the marketplace on a more real time, kind of a habit forming, you look at it over your coffee sort of basis. We're adding a really slick watch list on top of your portfolio performance as well. So keep an eye out for that. Um, so we're just at about time, and no new questions have been added, but I'll just take this opportunity to thank you all for attending. Again, use the drawdown risk report to examine the risk in your portfolio, look at exposure, look at the diversity report, and use those custom groups to really understand how your portfolio is postured. But there's a lot more than just performance in ShareSite. So please give these reports a try. And if you have questions at all, just hit the icon at the bottom right of your screen, and our support team will be able to give you a hand. But again, thanks all very much. I appreciate the time. Bye-bye.